Hey guys, it's Chris Mincolla with the Mincolla Group over at West USA Realty, and I hope everybody's having a great week and hope you're ready for a great weekend. I am going to be doing our weekly housing market update, and I'm going to jump right in. There's a lot going on in the markets right now. They just had information on the tariffs. They're coming off, but they're being put back on through a different form of regulation law that the government can use that President Trump's using. So we'll see how that works out. Nothing really volatile in the bond market though this week with that, but lower mortgage rates draw borrowers back to the market. Loan applications rise 2.8%, marking the first increase in weeks. That's actually a little misleading because we're actually up 8% year over year on mortgage application data. Although we did have a little lull during, with these storms that have been going on. So it can be a little misleading when you dig into it and the why. Overall, we were up 18% for the year until these snowstorms hit. So this is across the country. Um, as far as what's going on with the numbers, I wanted to just show you some raw numbers here straight from the MLS from our rapid stats. Um, right now, our listing count is up. Let's see, it's active at 17,555. Looking over the last 30 days, that means we have active listings up 8.25% over the last 30 days. Makes sense coming out of the holidays and getting into the new year and the swing of things. From last year, though, we're up 6.92% from last year. So that's pretty interesting. Nothing huge, but interesting that I think a lot of people are just, ready to make a move, get things done and or relist. And that's what's happening or starting to happen right now. And for our sold listings, properties that have actually sold, we're up 27.47% over the last 30 days. That's very encouraging. Like I said, in the last couple of weeks, we've been seeing multiple offers on a lot of our listings. If as long as they're in good condition, or priced appropriately, we take care of the rest. Over the last year, you can see that the listings sold is actually up 4.14%. So we're definitely heading in the right direction there. And then looking over here at the under contracts, we're up 34.43% in the last 30 days. That's very, very encouraging. And again, these are all property types. And from last year, we're up 8.38%. So for the clickbait, doom and gloom, the doom porn that's out there, as far as the Phoenix area is concerned, things are going quite well. We're off to a good start. Sold to list price ratios, we look at the average. The average is always going to be a little different than the median. The median is usually what we tend to want to look at a little bit more. And that seems to be definitely going up. So what they listed for, what they actually sold for, right now, we're running right at about almost 98%, just under 98%. So that's very encouraging. On the average, we're at about 97.6%. So nothing out of the ordinary there. Usually, like we see right around that 98% mark, but this is really really good stuff. So that's how much sellers may be giving up right now. That's kind of a normal market range, though, guys. So nothing crazy there. Price per square foot the last 24 months, we can see that we're actually up, and going in an upward direction there, from where we were just in the last month. So that's good. That seems to track. Nothing crazy again, but we're up on the median and the average. So last month we were at 262 median and 291 price per square foot average, and this month 266 and 297. So that's really good. So that's moving in the right direction for sellers. And supply versus demand the last 48 months, we could see the month supply, like we mentioned earlier, is going up. And then we have the absorption rate, which is actually up from the last couple of weeks at 20.51%. So all heading in the right direction. Now, last year, this is across the country. Just to give you a quick look at across the country, price reductions. The price cut percentage is at 32%. Last month we were at 33%, so that's heading in the right direction for the whole country. And without getting into all the other stats, mortgage purchase applications index, that's down again. Has to do with those snowstorms. So when you hear the doom and gloom out there, you can just ignore that. We already talked about jobs and our inflation data. PCE did come in a little bit hotter than we wanted to see, but the CPI was way down. And we see also that our jobs report came in good. So on the 10-year, not too much of a reaction on the tariff news, really. We ended up the day at 4.08, and that usually is going to track about 1.6% to 1.8% with the average mortgage rate across the country, which right now is at the average 30-year is at 6.04. Now, always got to show you this. Our local mortgage broker at Semperfi Home Loans, Andrew Fisher, full disclosure, he's our son. He's got conventional mortgage rate at 5.3% this week. And he's also got ARM product. So, well, just looking at FHA 5%, VA 5%, Jumbo 5.5%. He's also got the ARM products out, and the conventional is 5.2%. Okay, for a 5-year ARM. The FHA is at 4.25%. That's good for 5 years. After that, it can fluctuate up or down once a year. Okay. And the VA is at 4.12%. Now, you can always refinance out of that if rates drop, which with the new Fed chair coming in and some other shifting around of personnel, and some better numbers here, I think we're going to see that rate come down. I mean, Trueflation, which I love Trueflation. They give you the real-time data, not the rearview mirror inflation data. We know shelter costs have been coming down the way they track it for the last 26 months. Jerome Powell just finally caught up with that a couple months ago. But with real-time data, we know shelter costs are way down when they look at owner's equivalent rent. And when we look at real-time data rent, that makes up a third of the inflation rate. This is why they're so far behind. That's one of the biggest pieces of the pie for inflation. And Jerome is just way behind on that. And he's just, gonna have to play catch up at some point. Otherwise, you're going to end up with you could end up with deflation at some point here. We don't want that either. That can be a problem in a different way. The Cromford Market Index shows us right now in a buyer's market, but again, I think some of this is also going to be picking up as we saw those numbers starting to increase over the last month and over the last year. I think we're going to start seeing ourselves in a balanced market here really soon. Right now, supply is right about where we want to see it, right at 100. Below 90 is the buyer's market on this index. Over 110 is the seller's market. And for the demand, right now, we are definitely a little lower than that 100 benchmark at the balance range where we would like to see it. We're about 16 points lower than that. But again, we're just starting to get into the busier season, and certain areas of town are seeing multiple offers. Looking at Maricopa County right now, when we look at the active versus what's actually under contract and that contract ratio, we're actually right now in going up on that. This gives us more real-time right now data, the most current we could possibly have of what's actually active and what's actually under contract. And this has been going up steadily, as you can see the bars here on the bottom right. This has been going up. Last week, we were at 34.6. This week, we're at 35.6. Okay. And just a month ago, we were at 30. So we're in that warmer range right now. When we look at the active map, We can see Gilbert 85296 is a hot area, along with a couple of zip codes in Chandler 85286, 85226, and also Phoenix 85028. Those are all hot areas. And these blue areas are the cold areas. We had a ton of this over the past several months, but now we're seeing that everything's coming more into that warmer range. So just keep in mind, if you have any questions at all, you want to work with the best, not to toot our horn or anything, but West USA Realty was named by Forbes using 100 different metric models as the best in state companies. We're celebrating our 40th anniversary this year. So, if you have any questions at all about what our system looks like to get your property sold, we'd love to be able to just, even if you're just curious, we don't mind coming by your house, taking a look, walk through for about 10, 15 minutes, talk about the updates you've done, the current condition, no obligation, no pressure at all. Leave you with a nice little comp package, of the actives, the properties that have sold in the area, the properties that are actively for sale, the properties that are for sale but are already under contract, so that you can really get a good picture of where things are in the market. We can break down some of these numbers that we look at every week for your area, your particular neighborhood, not only the zip code, but your neighborhood for your type of property and the features that you have on it. And then, we can give you a net sheet of what it would look like with three pricing strategy, whether it be, you really want to, get as much foot traffic as you possibly can through the door on the lower end, kind of more in the market range. And then maybe you have aspirational pricing. We can kind of break that down and what it would look like in a net sheet for what you owe, if anything, on your property. And for what it would look like on a breakdown on a net sheet after all the title costs, commissions, and fees that come along with that. So we can break that down for you. If you think about buying a home, again, Andrew has, I can't believe the rates he has, and he does a fantastic job. He is a VA specialist, but when it comes to FHA conventional, he knows the ins and outs of all this stuff even better than we do. And he will definitely take good care of you on that end. We will help you with the searches, negotiate the best terms for you on your purchase. And again, with the if you're thinking about selling a property, at least you'll have some good information to walk away with, and we can keep you updated on the prices. Even if you're a few months out, 6 months, a year, 2 years out, it'll be good to kind of have that starting point, and then we can kind of work from there and keep you updated on what's going on in the market from a professional standpoint. Because when you just kind of plug in some of these Zestimates, can be off even in their disclaimers by 17%, just pulling in all the data from a zip code, not really looking at the on the ground level of things, or even using AI and stuff. Yeah, that's fun to play around with, but you really got to be able to break it down and understand, the competition that's in the market, where we are right now versus where we come from, what's actually appraised in the area, what concessions are being offered in your particular neighborhood. All those things will break it all down for you so that it really makes sense whether or not to make a move now or not. So if you have any questions at all, feel free to reach out. We'd love to be able to help you out when you're ready. Thank you so much for joining me this week. Please like, share, and make sure you're following us on social media. We'll talk to you next time.